may be pre-recorded.
The following program is paid for by Ray Sasser.
Ready?
The following program is paid for by MassivePassive.
If you've dreamed of having a massive passive income, but didn't know how to get there, listen to the Massive Passive Show. You'll hear top investors and experts share how to tap into the incredible opportunities that Houston offers real estate investors. A favorable business climate, low cost of housing, and that Texas wildcatter mentality are just some of the reasons that the top investors nationwide are flocking to Texas. The Massive Passive Show starts now.
Good morning, Houston. Welcome to the Massive Passive Show. I know this is going to be another great show.
Look at that smirk on your face.
Well, I know,
you look
because-
like the cat that just ate the parakeet.
Yeah, well, you know, I'm the kind of the head dog right now. So, you know. Anyway, I'm Pat Reisinger, and welcome to our show. Sitting to my left is James Haney, which is a very critical part of this company because he's always doing sales and the podcasts and the Zooms, right?
Yep.
And of course, the head honcho over there, Jefe Grande, Ray
There you go
Sasser.
again.
Yeah, he hates that word Jefe Grande. He says, I need to look that up because he thinks we're saying something nasty to him. But it's really a compliment because he's really the head dog. And then, of course, the indispensable Hal Gailey,
Yes.
which is our engineer. He makes all this happen for us every Saturday. Matter of fact, when we do especially when we're doing the show live from our events, you know, he sets all that up and gets it all rolling. I mean, he's here like bright and early.
Plus, just working. I heard y'all guys were up 2:30 in the morning working on the
you know,
sponsors and stuff.
It's amazing. I got up to use the bathroom, right? It's
Right.
like 1:30 in the morning, 1:45, and I look, and my phone is Hal. He's texting me, and he's going, "Hey,
He put an app in there. You got to watch what you where you take that camera
yeah.
with you.
Yeah, well, he's probably watching me, you know. Like, oh,
He is a tech guy, so
like, look at that little thing, you know. So anyway, you know, we're working on our website, making sure all of our vendors are in there right and all that, because you know this show's brought to you because of our vendors. Basically, I mean they pay to be marketed on our website and through our events. And real quick, I'd like to mention a couple of those guys. We got JD Fence Company, which is Jesus Duran. He's actually worked for me for like 15 years.
Right.
Does all my fences. Great guy. The fences are perfect. They're beautiful. If you're a rehabber or even if you're a homeowner, especially if you're a homeowner, you know, you get a really quality fence that's going to last years and years and years because they do it right.
The other thing that's almost as important as doing it right is knowing that when you call them, you're not going to have a lot of drama and a lot of games are going to be played. They're going to get out there, they're going to set a time, and they're going to get the job done right, and you're finished.
You know, in most jobs, I mean, unless it's just a huge fence, they can actually take down an old fence and put up your fence in one day.
Yeah.
Because they bring their own sand and cement all in the back of their truck. They don't use bags. They
Right.
mix everything up. And I mean, it's really fast, and it's straight, too. I mean, just straight as
So
never.
they actually mix their own concrete.
They
huh?
do.
Oh, that's pretty
Yeah,
cool.
it's pretty cool. And the other thing I'd like to mention is someone that we work with all the time is Cookie at Transact Title.
Yeah.
I like to mention these lender guys a lot to our listeners because
Title.
if you're a rehabber, you know, you need these great tools in your toolkit. I mean, because that's kind of where your job starts, right?
Right.
I mean, your construction vendors come after these guys.
If you're a real estate investor, the very first thing you have to do is build your team. And these, like the title, like Cookie at Transact Title, they have attorneys on staff. They do residential and commercial. You know, and investors tend to bring them the low dollar stuff, and then when they go to sell the property, they forget to make sure that title goes through that title company if possible.
Right.
So take care of your team members, and they'll take care of you. They'll be there when you have a question, when you have a complication in a title issue or something. It's nice to be able to pick up a phone, talk to their team, get an answer, and say, yeah, this is what.
Well,
we
let's
have to
face
do.
it. If you're rehabbing houses and flipping them or holding them for rentals, it's
Right.
really a different animal than just regular homeowners buying a house, right?
Right.
So you really need someone that understands your business,
Yeah.
and that's why it's good to have these people like Cookie Long over there, Transact Title. The other thing is, I like to mention one vendor that's very important is Fantastic Floors, Lauren Miller.
Yes.
You know, when you're doing your house, the last thing that goes in is the floors, right? And so you want to make sure they look good.
I don't even know how Lauren makes money because he does a flooring job cheaper than the subs that do it, and he's basically running all the subs. He's got great guys. We never have trouble with him. We're constantly throwing oddball, weird situations at him, and he goes and tells us what to do. And then sometimes we don't. We used to not listen to him occasionally. Now we listen to everything he says. We say, "Hey, no, we want to put this kind of floor down." He says, "Don't do it."
That's right. Well, you got to listen to these guys because they want to make money, but at the same time they want to take care of their customers because they want you back over and over and over. And if you're in this business, that's what you want is people that you use over and over and over.
Yeah.
Okay. I'd like to run through a couple more quick. The Owner Finance Company, which we just took on a couple of months ago, which Jen Perez and Valerie over there.
Right.
They're great because if you that gives you your options, right? When you're holding houses. To either be a landlord or sell it as owner finance, right?
Right.
Also, there's another company, and they're kind of like competitors, but they're not. They know each other, and that's the Owner Finance Network, which is
Scott Horn.
Scott Horn, and he's a great guy because he's an RE attorney. And matter of fact, I think that the Owner Finance Company probably go to him sometimes when they need.
Well, Scott's brilliant. He's experienced. He's seasoned. He's mature. He does complex, creative deal structures. He's one of the 2 or 3 top attorneys that I know of in the state of Texas. Mm-hmm. And the good thing with an attorney is they don't have to be in your backyard to solve your problems for you. He's in Texas. He knows the Texas laws. I don't think you could ask for a better person to have a problem and talk to because he knows how to put complicated things together.
Right. Well, you know, one of the things I'd like to say real quick that we need to kind of keep driving home around here is, you know, you can get this show on the IR app, right, James?
Yeah, on the iHeartRadio app and also Alexa, or you can even listen online. They have a listen live button as well.
And don't we have like a podcast or so?
We do have a YouTube channel, and there's a link right on our website. The website is MassivePassiveShow.com. I'll say it again. It's MassivePassiveShow.com. You can get all these vendors' information about our events, and a link to our YouTube channel.
Yeah, well, I got to keep asking James and Hal and Ray all this, you know, technical stuff because, you know, I'm old. Old and shaky, and I don't know all the stuff about this, so I'll refer to James a lot.
Well, I depend on Hal because I don't know half the stuff that he does for us, like how he does it.
Right.
We just basically tell him, hey, we need this function, we needed to do this, and he does it.
Yeah, it's amazing. And real quick, someone we're going to talk to this morning is Tom Stinson over at Goosehead Insurance, right?
Yeah. And believe it or not, after Pat gets through this, we have a jam-packed show, and he's going to be a part of the show talking about insurance issues that relate to what investors need to know.
Right.
Whether you're a buy and hold, whether you're a flip, there's just so many options, and if you get them wrong, you may not have insurance when you think you do.
Real quick, I want to mention this guy because I want him to be a vendor. Is Mario Cabrera. I saw him on matter of fact, not on our Facebook, but on mine. You know how you see people that post their ads, you know?
Yeah.
And this guy does masonry work, you know, brick repair and all. And I mean, his pictures of the houses he's done, the before and afters, are amazing. And I tell you what, it's really hard to find somebody that can repair brick, because if you're in this business and you're buying and either buy or hold houses, if you're flipping houses especially, they always have foundation issues, right? And there's cracks in the brick. And it's always difficult to find someone that can repair that so it doesn't look like a repair job.
I'll tell you, 9 out of 10 contractors that tell you they can repair brick, it's not acceptable when they finish.
No.
And I'm telling you, that means 90% of the time you're not going to be happy, and ask me how I know.
Yeah, no kidding. And I'll tell you what, I've actually gotten paint and mixed it up to find the colors of the brick and done a little brush to kind of touch it up, right?
Right.
Because I'm not an expert at doing that stuff, but
Right.
this
The guys
guy,
that do it all the time, they know how to mix the grout up and they make and the mortar up and they get it right.
I tell you what, I want this guy to be one of our vendors, and I told him to listen to the show. So Mario, if you're listening, we need you to be a vendor because you have a craft in your particular deal that's very good, and people that listen to this show are doing houses, they're going to need him. So anyway, at that, I'm going to turn the show over to James and Ray, and I'll just butt in every now and then.
Just every now and then?
Yeah.
Just every now and then?
Well,
Hey, where's his volume switch? Does he have a volume
Do
switch?
we have a
over
mute
there?
button, Hal?
yeah, well, that's what they say. If you're a man, there's a couple of buttons that you need to have on your wife, and one of them is on and off.
Man, I never know what's going to come out of Pat's mouth.
Hal, get that mute button ready. Come on.
Yeah, well, she's not listening to the show, so I can get away with it.
All right. So we're going to go ahead and jump right in. And like Ray mentioned, we do have a jam-packed show. Hopefully we can touch on a little bit of everything here. But we're continuing our theme for this next couple of weeks is, subject to and creative financing. Because that is where the market's going, all over the internet, all over, social media, you're just hearing all about how to make creative deals. And that's what you got to have that in your toolbox to be successful today. So I want to talk to Ray a little bit about, when it comes to these types of deals, finding them, evaluating them, knowing what makes a good deal. And then maybe we'll talk a little bit about negotiating with the sellers. I know Ray really loves talking about negotiating.
Yeah, I do. I am very passionate about it because I started out as an introvert, and it's like, how do I talk to people? How do I communicate with them? How do I persuade them to do what I need them to do or what I want to do? And when you're an introvert, you don't take any of that for granted. An extrovert takes it for granted, but then they don't develop those skills and they don't learn how to have those important communications. One of the things I want to step back a little bit, in the marketplace right now, the creative real estate investing, all of a sudden it looks like all the world is waking up to creative real estate investing, and it's literally been around 4,000 or 5,000 years. I mean, it's always been there, and there's so many good lessons in history that we can learn from. And I think what happened is wholesaling became like its own thing. It became big. Everybody wanted to do it. And now the wholesalers are realizing that they're in the wrong business. They're in a transaction-based business because they never learned the tools and the techniques how to convert some of those wholesale deals into buy and hold. And in 2007, I saw firsthand. I mean, I was experienced and mature investor in 2007. And I saw so many people get washed out of the business in 2007, 2008. So especially if you think wholesaling is where you want to be, I'm just telling you, you're wrong. Like becoming a big time wholesaler is like becoming a quarterback in the NFL. It's just not going to happen for so many people. Whereas you don't have to be that 1 in a billion person to play. To be the creative guy, you've got to learn a lot. You got to work at it. You got to hone your craft. But you can start putting things in your inventory and then reach your financial freedom number. And if you're doing something else, you're just wrong.
Well, Ray, I know a lot of these wholesale places now, like well, I'm not going to name names, but they're like car salesmen.
Thank God.
Well, I mean, thank God, right? Is they really just hire a bunch of guys to go out there and beat the bushes.
They
make all the money.
They
right?
hire car salesmen, and they go out there and they promise things. There's fraud inducements where they're telling people that they're going to do things. Wholesaling is a very tricky and dirty and nasty business, and a lot of it's based on science and good strategies. And a lot of it's based on fraud and deceit, letting down sellers. And if you're not going to survive in this business if you make promises to sellers and then you can't keep them. And if you're a wholesaler, by the nature of the structure, you can't keep it because you're not the one closing the transaction. Right. You're depending on maybe somebody else closing it. So it's a big, big problem. And I'm not saying don't wholesale, because if you're out there spending $5,000 or $10,000 a month in marketing, you're going to get a lot of deals that don't make sense for you. And it's natural to wholesale them. And if you vet your buyers and you know that you can follow through on your promise, if I'm a wholesaler, say, Pat, are you good to buy this house? Because we're going to sign the contract. Are you good? You sure you're good? Show me proof of funds. Show me how you're going to put this deal together. Then as a wholesaler, I can, with a good heart, get a seller to sign the property.
Well, you really need a lot of buyers in your toolkit,
Right.
Good
buyers,
good buyers that are going to take the deal.
Yeah, it's quality buyers over quantity. But I was actually going to correct you a little bit.
Okay.
On if you're out there wholesaling, you're wrong. I thought you were going to say if you're out there wholesaling, you need to learn how to negotiate the deals that we want and bring us your deals, and we'll buy all of them from you.
Exactly. I don't know why I didn't think that.
Well,
okay. I mean, it's a fact that a lot of investors are buying from wholesalers. I am. If the deal was presented to me and it's good, we have set ourselves up to buy, evaluate, buy quickly, because that's what wholesalers need. A lot of deals are flaking out, or the seller's motivated and have 3 to 5 days. So a lot of times you have to move fast.
In fact, this afternoon, I'm going to throw a shameless plug in here. This afternoon, we're going to be doing a free webinar, and you still have time to sign up for that. All you got to do is go to MassivePassiveShow.com, and again, that's MassivePassiveShow.com. Click on our events page and send a request for it, and we'll get you the link for it. And we're going to talk about what we're talking about on this show today, subject to and creative finance. And we're even going to give away a flow chart for
flow chart on how to do the sub two. Sub two is one of the ways where you can close a transaction without really bringing any funding to the table, or very little funding. And what that does is, by not having to worry about all that funding, it allows you to become a buy and hold person. Because if you have to have the funding and you don't qualify for the funding, you're stuck. So now you're a wholesaler, and the sub twos kind of open the doors to people who may not have that funds, but they can take over existing mortgages. And so we'll give like a more detailed view of how the sub twos work, and we'll talk a little bit about other creative structures. It just blows me away. I'm dialed into those guys. I go to those events 2 or 3 times a year with the best guys in the country. And after doing this for 38 years, it just, as much as I've done, it just blows me away. You go around that stuff, and there's always another way. There's always another way to think outside the box, another way to put the deal together. And that's where it's at, because if somebody has a problem and I can solve it, we're both going to do good in the deal.
Mm-hmm. And by having this extra tool in your toolbox, the other thing it allows you to do is stand out from your competition. And, if you're talking to a seller and they've got, 5 or 10 other offers, which we're seeing that a lot today, you can beat out those other offers.
We've done, a lot of times wholesalers understand that it's not working. They understand, look, I only make money when I go to work. And that's not investing. Investing is making money when you're sleeping. If you're making money when you're sleeping, you won't work every day for the rest of your life. Yeah. Well, that's what investing is. Investing is, Warren Buffett said that. He said, if you're not making money when you're sleeping, you're going to work for a living every day. Mm-hmm. And the key is figure out how to accumulate these things. And you'll be surprised if you really put your heart into it and your mind into it, what you can accomplish in cash flow in 3 to 5 years. It's just mind-boggling.
So I think we have just a few more minutes, and we have somebody that's going to be calling into the show from Goosehead Insurance. So let's go ahead and move right on a little bit and talk a little bit more about negotiating. You made a little comment a few minutes ago. I don't remember exactly what you said, but it was something about getting people to do what you want, and it was quite funny because we used to do our radio show from the station. Now we're off-site, and there was no negotiations in that. That was just, this is how we're doing it.
Yeah, we're not going to pay you what it is because you'll probably want to come blow the place up.
But yeah, talk a little bit about negotiation. It's one of your favorite things to talk about.
Well, I think, first of all, we negotiate every day on everything. And in fact, the Power of Persuasion and How to Win Friends and Influence People is probably the best book ever written. It's a kind of book you just should force yourself to read every couple of years. We just did a presentation where we were going over scripts to a focus group that for one of our RIAs, and we're going over the scripts. And what I did is I got the clip notes of How to Win Friends and Influence People, and I got the script, and I just kind of ran them both in parallel. And some of the most important things, like in that book, are absolutely necessary when you're going through a dialogue with a seller or a buyer or a wife or a son, or any kind of conflict resolution you might have. Just knowing how to think about what the other person's needs are, think about how to solve their problem, think about what your needs are, and somehow marriage those together and come up with a resolution that's in the best interest of everybody. And there's so many good books out there, like the Principled Negotiation, the Power Principles in Negotiation, Chris Voss's Never Split the Difference. Brian Tracy's got some great books out there on negotiations. In my opinion, that needs to be part of your repertoire, as part of your learning that you should be doing once a month. You should be connecting. You should be connecting with somebody that's an expert that's given a lot of thought on negotiations. And of course, I love anything that's real estate related, training on negotiation. So there's just so many good things out there. But what else? Just
you listen to those books, like audio books on your way into work, or if you're working out, just have them in your ear.
Well, the very first one I ever listened to, he's still around. He owned he ran a large brokerage out of California. His name was Roger Dawson, and it was real estate. It was some little real estate investing negotiation, but it was a lot of it was dealing with brokerages issues. Like how to get buyers and sellers to do what they promise they're going to do, and then him try to come to the table and help his agents solve the problems. That stuff, you don't even know how valuable it is until you listen to it, you internalize it, and then you'll be surprised. And a week later, you'll be using something you learn in that.
Mm-hmm.
So
and he didn't learn all that himself, but he put it all together from all the people he worked with.
Well, you have to be a student. The stuff's out there, and one of the things when Charles and I do our negotiation class, we're talking about how to convert people from selling for all cash, for example, to doing creative structures. Like a lot of people say, well, why would an 85-year-old person accept owner financing? And if you think about it, and you got to ask that question because the question is more important than answer. If you think about that question, well, why would an 85-year-old person agree to 20-year financing? And a lot of people say, well, they wouldn't because he's going to live 5 years. But what if you say something, or what if you make sure he understands that he's got children, he's got people he wants to take care of. What beats a 20-year-old cash flow coming in? Just understanding that, now like, hey, I can solve a problem he may not even be aware he has. So understand what their problems are, and then you can go from there.
You want to call Tom?
Yeah, is he calling in, or
I don't know. Does he call in yet? Why don't we just give him a call real quick?
So while we're going to get Tom on the phone, let me just share with you some of the things that we have coming up. Like I did mention this afternoon at 2 o'clock, I didn't mention the time earlier, but at 2 o'clock we have that free webinar, and it's going to be on this topic, subject to and creative financing. We also have at our Alamo Ria in San Antonio on September 9th.
And I think Tom's in. Tom, hold on a second. We'll be right with you.
It's a Thursday, September 9th. There's a networking. I believe it starts at 6 or 6:30. But again, all you got to do is go to MassivePassiveShow.com and we can get you that information there. And then next Saturday here in Houston at the Baker Ripley House, we will have our vendors, and we have a networking event and a presentation about subject to and partnerships, and how Ray and one of his partners made over $100,000.
That's at 4410
in
navigation.
In one deal.
In one deal.
Yeah.
Right. So that's next Saturday. That meeting starts at 8:30 till noon. Again, MassivePassiveShow.com for all the information. And you just put in a request, and we'll get that to you.
Hey, Tom, are you there?
I am.
All right.
Great. Hi, Tom.
Hi, Tom.
Hey, this technology worked, and I mean, how's keeping us out of trouble?
Yeah, well, actually, yeah, no kidding. And, well, it's better than the radio station, actually.
Hey, we invited Tom on the air with us because he's a great insurance person and seasoned and knows how to work with investors and people who do buy and hold. And I've slowly but surely, sometimes through the school of hard knocks, learned how to do insurance right. And as investors, we have to understand how insurance works. And there's now the insurance, Tom, is changing faster. I mean, it's changing at light speed. Things like, in fact, I don't know. Well, I talked to Tom earlier this week about windstorm in Florida, and he said they don't have windstorm in Florida. That's a Texas thing. It's like, yeah.
Really?
So,
I figured they'd have it there.
no, and until you've been punished by doing windstorm incorrectly, like I have, you don't respect how important it is to do it right.
Right.
So, Tom, tell us a little bit about your company and then what kind of things you do with investors.
So my wife and I have been Goosehead insurance agents since 2015. And for all of those that don't know, Goosehead is the largest independent broker for home insurance in the United States. Most of the insurance people out there are either captives, like the State Farm nationwide characters, or they're independents. But as an independent, you're limited in how many carriers you can have and how much you can do with your time. So at Goosehead, and by the way, Goosehead's the only independent insurance agency that's focused on personal lines who's publicly traded. So we're one of 1,600 Goosehead insurance agencies in the United States. We're actually in the top 10 of those agencies. So Goosehead's got a lot of young people. Average age is like 27, whereas the average age in the insurance industry in general is over 55. So, and I'm 53, and the wife's 55. Of course, she'd be mad at me for saying that on the radio.
Yeah.
Yeah, okay. You're probably not getting any supper tonight because of that one.
So we, unlike our cohorts over at Goosehead, we've been in business for a long time. The reason people have never heard of Goosehead is all the marketing goes to lenders and realtors. You only hear about us when you go to buy a house. So all of our clients are in the process of purchasing property. So the biggest mistake that I see real estate investors make is they are very focused on premiums. And I would say that they're penny wise and dollar foolish. So in order to get the premiums down, they'll get 20% discounts on their policies. But the problem is what those discounts involve is like you're talking about, that 70% of the claims in Texas are wind and water. That's your whole damn policy. Now, if I give you a 20% price cut in order to eliminate 70% of your coverage, what the hell good is that?
Exactly.
And that's what these guys are doing. So they're losing out, and then the freeze, lots of them ran into this problem, where their water damage was capped at $10,000, and they got a $50,000 claim. So if you can be an investor and you can have all the success you want, but one of those big claims, and that's going to wipe out years of income for you.
Yeah, there's you end up with like a house where you end up with 2 inches of water in it because of a busted pipe. It's 10,000 won't even come close to touching that.
Oh yeah, I mean I have people that are still out of their house from the February freeze, and it's 7 months later.
Mm-hmm.
Wow. And well, and we've bought a couple of houses that froze because the people didn't have the proper insurance.
Right.
And
You got one with all the furniture in it.
Yeah, yeah, sure did.
The key for investors is to get with an agent who really knows the market. I mean, the insurance business they don't want flippers, they don't want landlords, and they make that really clear. A lot of these carriers have clauses about being owned by an LLC, about being owned by a trust. They're onto the game, and they don't want to pay claims for investors. And they try to trip you up with little stuff like vacancy clause that's vacant for more than 60 days. And then if you're doing Airbnb, if there's not a fully signed, executed 12-month lease, there's lots of these little rules. Not every insurance agent knows their carriers really well. So if you get a good price from one of those companies that has an exclusion, that's just death. You've been paying for nothing. And now you finally get that big claim. And insurance kind of like a slot machine. It's gonna pay out 90% of the premiums it takes in. But if you never get that payout, then you're just 100% loser.
Yeah, and and a lot of people don't realize how often that happens, but it happens a lot where you just have the wrong insurance. And kind of just, if you can think about it, Tom, kind of just name the different, like what the title of different types of insurance there are.
So the landlord industry is broken up in these little pieces. So the insurance language that agents use is they'll use the term dwelling fire. And one of the most common questions that I get is what's the difference between a dwelling fire and a builder's risk? And the answer is a builder's risk is just that. It's for a builder. If you're not a builder whose business is building homes, getting a builder's risk policy should only come up when you have a home that cannot pass inspection. Every home that I insure, or every home that any agent insures, somebody's going to go out to their house and take pictures. Now these days, they're pretty unannounced. They fly a little drone over to look if there's any major problems with roof or any other major hazards, and that's it. They're gone.
Wait a second. You mean my insurance guy is going out there flying a drone over in my backyard?
Absolutely.
Oh, I didn't know that.
Yeah, well, you better start putting clothes on, dude.
So that's the fun part. So that's just insurance contract. It's not saying that it's okay that they inspect the property. They can inspect it without announcement. So when they see homes that are vacant, they see the inside if you don't put up curtains and so forth. Anyway, so when that inspection can't be done because you know there are problems with the property that the insurance company is going to cancel, that's when a builder's risk is necessary because it's our only choice. But if you're buying a house and you're going to do some what we're going to call light renovations, which means you don't have to go file for permits, there's no structural remodeling, then there's no reason to get builder's risk policy, which those don't include liability, and they don't include some basic perils that every dwelling, fire, or landlord is. So in Texas, the primary form is called the DP3. That's what you file with the state of Texas. But the insurance companies know that investors are cheap, and they give them DP1s, DP2s, DP3s. It's more confusing. I mean, you got more problems than a one-legged man in a tail kicking contest.
So what you're calling the dwelling and fire, is that the same as fire and extended?
Well, it is and it isn't, because when I say a dwelling fire with the DP3, that's usually meant to say that extended coverages are in the policy already. With DP1s, that means they're lightning only. However, you can endorse the fire extended coverages package. So unless you got an agent who really knows the ins and outs, you stand a pretty good chance of getting a policy that's missing something, and that agent may or may not be properly covered for his own errors and omissions. So
Right.
This is just like anything else. You've got to work with an agent that you see as a professional, not the guy that's giving you the best price.
Yeah. So my agent that goes to Vegas on a regular basis, I need to check out his E&O and stuff.
Well, the great thing about having Tom, an insurance agent like Tom, is that, he's aware of all this stuff that you need as an investor.
Right. Yeah.
And that's the key. Ask your insurance agent, does he own any properties? Because if he's never swung a hammer, if he's never said, oh, this is only going to cost $20,000 in repairs, and it actually costs $50,000, if he's never owned a property that has a nightmare tenant or tried to unload a property that he couldn't get rid of, I'm not sure this is the right guy for you.
Yeah, because he doesn't know what problems are going to come up. Just like, we had an air conditioner where they tore the stuff up, tore it apart, and they called it vandalization, right? But they were basically stole the good metal out of it, and so we got a lower settlement than if it would have been stolen air conditioner.
Mm-hmm.
Tom, share with.
I see this all the time. You see that people will get a policy, and that policy did not include vandalism and malicious mischief. We all know tenants get pissed off at landlords, and when they moved out, they do something that's going to cost you $10,000, and you didn't pay the $20 a year, him, and therefore you get no coverage for it.
So
I
what,
think
what you're saying is we need to pull the truck up and just load it up and get rid of it, right?
Well,
That's it.
I think what we need to do is we need to do like a 1 hour long podcast with Tom, because there's so many things. Like,
Yeah.
Tom, just share real quickly what co-insurance means to the audience.
So the co-insurance portion means that if the actual replacement cost of a property, if there's two, and we're getting off in the insurance land here, but there's two primary loss settlement provisions. The first loss settlement provision is replacement cost. It means I have a $20,000 loss. I'm going to pay you $20,000 minus your deductible. The other one is actual cash value. And this one's the one that people are used to with their cars, where we're going to determine what the value is today. The value when it was purchased is irrelevant. The question is what's its current market value. So co-insurance means that you've got to have 80% of this property. So if the full replacement cost is $250,000, you can insure at $200,000 and still have a replacement cost loss settlement provision. But if you insure at $195,000, even with just a small claim, they're going to have a $20,000 claim. That claim will be paid out on an actual cash value basis. So the idea with co-insurance is they believe that since you're not insuring the property to its actual value, you must have another insurance policy somewhere else, and you can't get paid twice on the same policy. So that 80% marker is really important, because one of the tools insurance agents use to reduce the premium is to lower the replacement cost. You got to be sure you're not getting to that 80% marker.
Yeah, so basically, if you insure it at 80% or above, you're covered. You go at 79%, you may be covering a lot of that loss yourself.
Absolutely. And on that $20,000 claim, you'll get a $5,000 payout. And if you don't have $15,000 before you can get tens in that property.
Yeah, yeah. Well, good. So tell people how we can get a hold of you. And I think I want to set up with Tom like a 1 hour interview on this, because the radio show is just too short. And there's so many things that, and we need to have investors actually call in and ask specific questions.
I totally agree.
Sure. So my office is easy. I tried to get the most rememberable number that we have, or that we could, 281-712-7272.
That's pretty
And
simple.
that thing rolls over to my cell phone after hours.
And then also, how else can they find them, James?
On MassivePassiveShow.com, we do have a page for our vendors and sponsors. And again, that's MassivePassiveShow.com.
Well, we've just barely scratched the surface, but the one thing is, when you're getting insurance, you really got to know that you're getting the right insurance, because if you get the wrong insurance person and they're not familiar with working with investors, they're not going to know the difference between a builder's risk or vacancy policy or a dwelling policy. So let's make sure we take care of Tom, and Tom is a wonderful resource for us. So, Tom, thank you for calling in, and we'll talk to you later.
Appreciate it. Talk soon.
Thanks, Tom. See ya. Well, what a
All
great
right. Yeah. That's great information.
Yeah, people a lot of times get the wrong insurance. We've had surprises 3 or 4 times. We very rarely, over 35 years of owning rental properties, very rarely turn in a claim. But when you do have to turn in a claim, like you have a total loss or something like that, it's bad news. Now, one of the things I like to do is I love being loyal to the people that bring me to the dance. I mean, that's one of my guiding lights in life, is always be loyal to people. You may not always get along with them, but you can always be loyal. And if you have their back, they'll almost always have your back. And a person like Tom, when they write that insurance, you should be telling the whole world how great they are, because when you go, if you turn around and sell that house, who am I going to promote? I'm going to promote Tom, right? I want to try to get my friends to use them. And I just believe in taking care of the people that are taking care of me, because when I have that problem, when somebody won't write insurance or our deals in the balance because the insurance can't be written, I want to make sure that I've got somebody I can pick up the phone and they're going to answer my phone calls. And that's what happens when you take care of people.
Did you get that number that he just gave?
It was so a bunch of 7272 there. 281.
Well, we got his cell number on the website, and I think we need to put his office number in there.
Yeah,
It's 281 712 7272.
Well, so he did a good
Yeah.
job. You
Oh, you
remember
got a
it
good
there.
brain,
Way to
man.
go,
Good for
James.
you.
Well,
He's smarter than he looks.
Well, of course,
Appreciate that.
I'm old. I chewed up a lot of my brain cells when I was young, like him.
Well, we have a number kind of like that. It's pretty easy to remember. So we have just a few minutes left. So let's go ahead and jump right back into this. Wanted to ask Ray to give some of his do's and don'ts when it comes to subject to.
There's a lot of guys out there been doing sub-twos for like 5 years or 3 years, and they haven't learned the lessons. Just like this insurance, you can't afford to learn the lessons on your own. You have to pick up a phone with somebody that specializes in investor insurance. It's crazy to do anything else. Like we were talking earlier about Scott Horn. I don't want an attorney that does, does every kind of transaction. I want to get Scott on the phone and say, Scott, set up this sub-2 for me right. Scott, set up this partnership for me right. I want the guy that's done 10,000 transactions. When it comes to sub-2s, we did sub-2s probably our third or fourth year into it, and we made lots of mistakes. And a lot of our sub-2s now have paid off, but some of the do's and don'ts, to answer your question, is we won't close a transaction on a sub-2 unless we get a complete seller information packet. We have to know how to get a hold of those people, because a sub-2 doesn't end when the transaction ends. That loan stays alive. So we may have to go backwards and get a hold of those people. And we've paid that price several times because we're busy. We get involved in other things. There's a lot going on, and we don't get that complete information packet. And now, when in our office, when we do an intake on a property, we have in our CRM, we have a process that we go through, and I don't know the exact steps, but it's like 30 or 35 steps. In our sales process, it's over 50 steps. But when our intake process, it's like one of the questions is info pack completely filled out? And that's part of our workflow when we on the class today. If they come to the class today, we'll talk a lot about that. But the do is get the information. Make sure the documents are done properly. Some of the don'ts, in a sub-twos are typically come along. If you're working the foreclosure market and you want to do buy and hold, then the sub-twos are a product of the foreclosure market, probably more than anywhere else. So what does that mean working backwards? If you're doing lead generation and you want to take on sub-twos where you don't have to qualify for the financing, which means you can buy and hold them, right? If you have to qualify for the financing, means you're signing personal liability. On the sub-2, we don't sign personal liability.
And subject to, just to clarify, is you're taking over the existing mortgage.
Yeah.
So if Ray wants to sell me his house subject to, that means I just take over the mortgage. I don't assume it, but I take it over because he'll deed me the property.
Right.
But then the deed of trust, the mortgage will stay in trust in place as it is.
Yeah,
you just got to make it perform. Every month.
Yeah. And I can't tell you how many mortgage payments my brother and I have made on sub-2s. It's in the thousands. It's easily in the thousands. And you just got to keep it current. What happens occasionally is we make the seller sign a disclosure saying, look, this is how this is going to work. We lay everything out. There's boxes that they check, just like when you go to the title company. There's boxes you check saying, hey, you understand that you're doing this, you understand that. So we go through that disclosure. So that's another do. We get them to we fully disclose. Then we get them check off that. And then we just make sure that we do our part. And it's very often that the seller's credit will be messed up because they're in default. When we buy the property, 4, 5, 6 years go by and they want to get new financing. we make sure they understand that that they're aware that that loan is probably still going to be out there, or there's a good chance that loan will be out there. And we often have to help them find a lender and make sure that we give the proper information to the new lender so that they can qualify for the new financing. So there's a lot of times they'll want that paid off once we fix their credit, because guess what? We've been paying their credit on time for 5 years. All of a sudden they went from a 550 credit score to a 750 or 800 credit score because we've been paying for their credit. So 5 or 6 years later, we may end up helping them get a new loan on a new property.
Well, that's really great because you've really helped somebody more than getting them out of that problem.
Right.
You've
right.
repaired the credit so they can move on with their lives.
Yeah. Yeah. You just make sure don't do the paperwork wrong. Like escrow assignments, make sure you do that. Insurance, make sure you handle that properly.
Well, if you're new, you need to get an RE attorney to work for you, right? And work with you if you're
not just a real estate attorney. I've had real estate attorneys ask for my sub-2 documents because they don't know how to do it, and they got a client asking them, "Hey, I've got a client that wants to do a sub-2."
Well, Scott would know that.
Yeah, Scott, we know how to do it. You just make sure it's like in real estate law. There's people. It's like everything else. It's just like doctors. They specialize in one segment of the market. You get people who know what they're doing. And the thing is, if you hire a contractor and you're going to hire a roofer, one of the questions I always ask a roofer is, how many roofs have you done? And if you're going to do a sub-2, you say, how many sub-2s have you done? Mm-hmm. And if it's 3 or 4 or 5 or 10, probably not your guy. And also, just like what Tom talked about insurance, you want to get somebody, when Tom said that, it was very clear to me he's an investor.
Right.
He's picked up a hammer. He's actually dealt like this as a user. And so if you're going to hire an attorney to help you with that stuff, get somebody that's actually been in that role as an investor.
Right.
Just like we have. So we'll talk. I don't know if people can make it. It's kind of late notice, but when is the thing this afternoon?
It's at 2:00. It's going to be online on Zoom. So all you have to do, and I was going to recap this here in a few minutes, but all you have to do is go to MassivePassiveShow.com and go to our events and submit a request for it, and I will send you the link for that today. It's from 2 p.m. to 3:30 Central Time.
Yeah, and the reason that we ask for your name and your email and your phone number, not only for that, but for other stuff we're doing, and that way you'll get notifications on this free stuff that we're doing, or workshops we're doing, right?
Right. Yeah, they'll get a lot out of it. If you've done anything you've done a lot of, you don't even know how much you know about it until you find out people who are struggling to do it, and they're putting like in our sub-2s, we set everything up in trust, and it sounds complicated, but after you've done 30 or 40 trusts, it's actually pretty simple, but it takes a while to figure that stuff out. But that's how we set it up. A sub-2 is very difficult if you haven't done one before. A lot of times people will just JV with us just so they can see how the sub-2 works. They say like, no, I want you in the deal because I want to make sure we do this right and we're properly protected and stuff like that.
Well, you're JVing with several people right now, right?
Oh, I JV all the time, everywhere. I mean, we just bought the couple properties that we're JVing with. A guy just put a deal out there where he's got a major rehab on a 5-unit, and it's in San Antonio. So I'll probably JV with Larry in San Antonio because I trust his judgment, and he's mature and wise and shows up for work and doesn't have drug problems. So, if you're listening, Larry, I love you.
He was on a phone call with me, wasn't he?
I don't know. Maybe, probably. Yeah. He probably called you. Yeah.
And then with our students, with our students, you're JVing with our students too.
Well,
we've got some deals going.
If they'll listen. If they won't listen, I don't want to JV with you.
Yeah. Never fails. Somebody asks me to help them on a deal, and I'll go, okay, here's your kitchen. I've designed it for you. It's going to cost $3,800. Oh, no, I want this $8,000 kitchen.
Yeah.
I said, yeah, that's fine, but what if you run into another problem? You're going to be upside down. And then later, they're upside down. They're blaming me because they spent $8,000 on the kitchen.
it's suicide not to tell the people the right numbers. You want to be their friend. You want them to hire you. You want to make it work for them. But then they blame you when it doesn't work out right. And it was because they were wrong from the very beginning.
Yeah. Well, they won't listen.
But the one thing I like about you, especially with partnerships, because you've been through a number of partnerships over the years, and you have one that's long lasting. But you just have it to where if we disagree, then you're ultimately right.
Well, that's why it's Hefe Grande.
Yeah.
Well, you saw what my wife gave me on my behind. It sits right behind me. It says, "Wow, you're right.
Yeah.
Right again.
Yeah,
You're always right."
My wife always says, "Well, I might not always be right, but I'm never wrong."
But this thing about being right, I think we have a duty to be right, and it's not an ego thing. We need to be receptive to new ideas, different ways of thinking about it. I remember one time you and I went out negotiating on a deal. I probably had 200 or 300 deals under my belt at the time, and you and I were talking to that seller. I think it was a seller, and then we went outside and you didn't say anything, and you said, "Well, Ray, why didn't you do that?" And I said, "Because I didn't think of it. Why didn't you say something, dummy?" I mean, because being right's important. I mean, it doesn't matter who's right. It's just getting the right result, getting the right solution, and sometimes when you work with other people, it's like steel sharpens steel. There's never been a truer statement. You're always, if you've been married a long time, if you have lots of partners, you have constant and regular humbling events that let you know that you can. I was trying to correct you the other day, and remember what I said? I said, I think it was, it was another person, but basically they were saying, "Well, why do you think like that?" And I said, "Well, it's because of this, but that's coming from a guy that just got cheated out of $1,000 from a contractor. So
Right.
my ability to qualify people maybe not where it should be either."
Yeah.
So.
Well, sometimes the real trick in this business is to forget about that problem and create with the next person
Right.
and start over. Because if you're dragging that baggage around with you, it's just going to get.
No, those are lessons. We're constantly learning. I mean, the big lesson is just show up.
Right.
Show up, hang out with people who are challenging themselves, and then go from there. So
We are done for today. Again, all of our information, MassivePassiveShow.com. Can't say it enough. MassivePassiveShow.com. Raise your hand if you just said it with me. MassivePassiveShow.com.
That's where they can get access to all of our sponsors, and these are guys who we've vetted, guys we've worked with, who know what they're doing, and you're not going to have drama and surprises at the end of the job.
Well, I get these new guys, and I talk to them. We have a conversation about their business.
Yeah.
Make sure that they know that we want them to be really good.
Yeah, and it's like one.
This AM 1070, The Answer.
Yeah.
There are a few things that are as jarring and
Good job,
unsettling.
guys. Great show. Yeah, our engineer was great too.
Hey, let's do like a post-mortem real quick, okay?